Good evening, ladies and gentlemen. Traders, I welcome you today to Thick Trend Thursdays. Now, despite the name of the webinar stream, it is not so trendy today. We will discuss the latest news that have happened yesterday, what our fearless leaders in the Fed have come out with, and what other economic news have come out. But more importantly, we will dive into psychological aspects, money management tactics, and what else you can do to become a sharp trader and develop edge. So I wanted to start the stream with a little bit of a roll call to see who is here today. If you guys could leave me some commentary. Good. Let me know if you can hear me, if you can see me. If the picture quality is good. And if we are ready to begin. So if you could write in chat where you guys are from, I'd love to know where our viewers are located around the world. We have a multinational community with traders all across the globe. Don't be shy, you guys. Unfortunately, I can't read that. That looks like it's written in Indian. I presume you are from India. Either way, nice to meet you. I greet you. Bonjour. Hello, Rathur. Hello, Stanley. Perfect. Thank you so much for your feedback. That is what I was waiting for. So, the key things, let's discuss what happened yesterday. As you all may know, ADP right here I have on the screen, non-farm employment change. Basically, that's a precursor to what will happen tomorrow on non-farm payrolls. Now, there was a tweet from somebody in the US government, and they let us know that the non-farm payrolls are going to be amazing on Friday. So these ones are good from ADP, and the ones that we are waiting for tomorrow are going to be even better. So please keep an eye out. Anytime non-farm payrolls are really good, that is an injection of extra capital into the U.S. economy, and obviously that's good for the dollar. So I'm a little bit bearish in the short term, but I know that today and tomorrow the dollar is definitely going to be showing us some strength and some pushback. Now, what else happened yesterday? Well, we heard about the interest rate decision, and Fed Chairman Jerome Powell came out with news. Now, if any of you guys listened to his presentation, the most important key takeaway is that he changed his rhetoric. It's very important to pay attention to the words that these representatives use, because they change their language very subtly, very subtly. Now, the way that he changed all of last year, whenever we would have a FOMC statement, they would come out and say, they would talk about gradual increase in interest rates. Well, last night, the word that I heard Jerome Powell use was patient. They're going to be patiently seeing and dealing with the interest rate. So that means that there's no more interest rates. Now, there's a really interesting futures contract. It's called the Fed Funds Futures, and that says that all the way up to the end of the year, up to October, there's only a 24% that traders like you and I put in for a rate hike. So it's going to be very interesting. Now, I want you guys at home to understand the dynamics of an interest rate hike. Interest rate hike is bullish for the US dollar, but bearish for the stock exchange. And right now, we know, we're going to look at a graph of the US stock exchange. It is in a very tricky, slippery situation. So it was a very foreseeable event that the FOMC statement would have very little effect on the dollar and the stock market, and that's what we see today. Let's have a look at how it did affect the stock market. So this is today's actually green candle. We have a little bit of more continuation, but we see that yesterday's red candle was a lot of indecisiveness. So despite the fact that we are not going to be raising interest rates anytime soon, nothing came about it. But what we do have today is a breakout. This is, now I have to constantly remind myself that a breakout does not mean follow through. But nonetheless, this is the first step, the very first step that we have in seeing what's going to happen next. So today's breakout is an indicator, and tomorrow we will be watching the S&P 500 very closely. So we have it here on our terminal. Very interesting to watch what's going to happen tomorrow. So we have broken out of the level, and looks like we are continuing to be indecisively bullish. Another thing that's on top of everybody's mind right now is the meeting that is going on between Li Hui and representatives from the US. We have Lighthizer and Munich. Those are the two gentlemen that are going to be in dialogue with the Chinese representative. Now, that is a very interesting issue because we have been watching how the rest of the world is affected by the Chinese economy. So I just want to take a moment and greet everybody here today. So hello Rathur again. Hey Peter from Nairobi, good to see you. Hey Kola and Jerry, nice to see you guys. Good job for being here. This is a very important part of your growth as a trader, as an investor. So we will, at the end of today's lesson, we will go through different steps that I don't know, game. It's hard to say. Friday is usually a day where hedge funds and active fund managers, they close their positions. So there's a breakdown through the week that actually I have named these webinars. So Mad Money Monday is for planning. We get mad, we get concentrated on Monday. We think about what happened on the weekend. We put plans, and Monday is usually a very slow day. Hey, Sarkar, how you doing? Or Anik Sarkar, good to see you. Tuesday is usually when we see trades forming. Trends forming. So Tuesday, Wednesday, Thursday are the best days to trade. Some people believe that Wednesday is not a good day, but I do believe Wednesday is a good day. And on Wednesdays, on our webinars, we have strategy days. These are days where I give you guys working strategies. At first, they're going to be very simple, but in a month or so from now, they're going to get more and more increasingly complex. Okay, so I'm guiding you guys by the hand to a very methodical, complex way of analyzing the markets. And you can see through these webinars that we take a look at the global picture. I am very much myself a fundamentalist. I respect technical. I believe that this is everything really you need to see, but I love the fundamentals because I need to know why, and I want to tell you guys why as well. So, there's another risk factor. The reason I say tomorrow down may be because we are unsure about another government shutdown on the U.S. government. This is up for debate. There have been rumors that because the demands have not been met, it seems like a very brutal thing for the president to demand money for something, but nonetheless, this is the way that American politics have gone, and it's interesting to watch. It's interesting to watch since Obama's time how things have changed. Actually, George Bush started the whole circus, and from then on, it was really interesting. Anyways, I love U.S. politics. So we have a tentative break here on the S&P 500. I have to remind myself, like I said, not to get in this trade right now because I need more confirmation. If we're going to be risking our money, on a daily basis, Banglo, we analyze markets on a daily basis. You can come here to these webinars. I'll write down when exactly they are throughout the week, and you can join us every day. We do this every day. Like this is a sport. This is a serious business. Just like a professional athlete, we practice every single day of the week. And on the weekends, We don't relax. We read trading books, we watch trading films, and we analyze what happened last week. Okay, back to what's going on. I want to teach you guys another complex way of comparing two indexes in the United States. So NDX is the NASDAQ 100. Everybody knows those are the top blue chip tech stocks that have been driving the US economy. We divide it by the SPX, which is the S&P 500. And this graph right here shows us some really interesting information. So this is the last, quarter, half a year. And this is a really interesting picture. Tech stocks have been struggling, and they are just now fighting their way back. Let's look at the bigger picture. What is going on in general? Since 2008, look at this. Look at this graph. Like, I'm going to explain to you guys what this means. Tech stocks have been running the world in terms of return on investment. The NASDAQ has been the #1 index, outperforming everything in the world for over 10 years. And so right now what we're witnessing is a little bit of a correction. And look at this. This goes back to 2008. Even this is as far as the graph will let me go on one screen. But this is how serious the outperformance has been on tech stocks. And so lately, in the last half a year, this is what we've been doing. And we can see this slow climb, slow grind back up. Now the DXY, the dollar, this is the dollar index. They broke through a trend line, and we can see the dollar regaining some of that position. So yesterday incurred a very bearish moment. Like this candle right here was incurred from the Fed's commentary on their political policy. And like I said, I'm a bear for the dollar. I don't see enough conviction right now in exactly what we are going to see in the near future. And the dollar has a host of issues that are going to be really pushing on it. Classically, the correlation between the stock market and the US dollar is that the lower the US dollar gets, the better it is for trade, and so the better it is for the US stock market. But right now, markets are really, really, what's the right word? They're unique. They're undecisive. Markets are very undecisive. I don't like chasing the market. I like to enter when we have a very, very serious confirmation of a move. And that's what we're going to be looking for. Now, if we look at some currency pairs, let's have a look at what's going on with the euro dollar. We also have a tentative break, but the most important break that I want to see is of this downward trend line. Optimally, we would reach the 200 moving average. Like I said, as time goes on, we're going to be adding more things to the graph. And the two things that I added today are the 50 moving average and the 200 moving average. Gold has always been the 200 moving average, yellow gold. The reason is it is a moving line of support and resistance, and 50 because I make my predictions off of the daily chart. The blue line is a very solid 2-month period crossover. So whenever the two cross, it's a very strong signal, and I want to assure you that almost every professional trader uses some form of moving average. On the stock market, it's very popular to use the VWAP, the volume weighted moving average. Volume weighted average price is the correct term. So euro has tentatively broken the channel that it was in. We don't have a lot of follow through with that, but what we do have is now an inclination of that this is a currency to watch. I would like to see a breakout, come back, retest the line, but we have a strong support with that 200 moving average. So again, I don't see a lot of potential in making a clear-cut trade, and we want to have very clear trades. Let's take a look at the pound. Now, the pound has been also in this tight. See, it's stuck in between a channel and the support of the 200 moving average. In terms of news, I'm sure you guys know that on Wednesday, May's proposition was declined in terms of a soft Brexit. Now everything is a little bit more on edge, and we could very well witness a hard Brexit. But again, we're waiting for more news, more confirmation. This big fall right here, big candle, was when the news came out late at night. I think it was 2:22 p.m. GMT +3. Now, a currency that I do like today is actually the dollar CAD. I love this break that it made, very clean. So uptrend, we came back, tested the trend level. Look at how clean it touches the 200 moving average. Again, super duper clean. Once price decides where it's going to go. Oh, and so we have GDP figures coming out from Canada tomorrow. Yeah, here we go. Tomorrow in the evening. That's today. They already came out. That's embarrassing. So actually, Canadian GDP figures came out. They were worse. They were about the same than expected, but 1.7 growth on a yearly basis for a government like Canada is pretty low. Actually, 1.7 is the prediction for the States from 2020 to 2023 years, those years. So they're slowing down, but because the US dollar is also under some bearish pressure, we have this kind of retracement from the 200 moving average. Now, like I said, tomorrow we have non-farm payrolls. Our webinar is going to be after the fact. And we will discuss what happened and plan positions for next week. Now, let's get into, actually, before we get into some really interesting charts, let's have a look at oil, crude oil. Now, this is the one commodity that really makes a difference for the Canadian dollar. And the tentative breakout here will result in direct profits for shorting the Canadian dollar. So the higher oil goes, the better it is for the Canadian dollar. In the foreseeable future, we are looking for a retracement back to the 200-day moving average. So that would be around $60 to $62 per barrel. So very interesting. The pressure, like, do you see how close we have been trading to the resistance level? That indicates that pressure is building. The pressure is building, and the longer that we have this buildup, the faster and the bigger the breakout is going to be. And as you can see today, we already have the breakout. So keep in mind that these are already in motion. So the S&P 500 and crude oil and Canada, Canadian dollar, are already in motion. So if you're going to be looking at graphs throughout the day, trying to make money, those are the graphs to look at. Now, I wanted to show you what's happening with the rest of the world. So we looked at the S&P 500. This right here, the VEU, is a ETF from the Vanguard Group. It shows the rest of the world stock market. You can see that the world over the years have been, having their ups and downs since 2008 crash. Nothing like the NASDAQ. And right now we are picking back up, but also we haven't passed our local levels. Just interesting for you guys to watch what's going on with the rest of the world. Now, another theme that this year should be very interesting is emerging markets, and look at how good they are performing right now. So again, we're touching the 200-day moving average. Unfortunately, on Olymp Trade, we do not have we don't have an emerging market index, but the Hang Seng definitely is one of those markets that does correlate very closely with the emerging markets ETF. So another great index, a future, a stock, a CFD that you guys can. This isn't a stock. This is a CFD, obviously, that you can watch. Now, another interesting financial instrument is high yield income. High yield fixed income. For those of you that don't know what a bond is, basically a bond is when you, as a trader, act like a bank. When you buy a bond, you give a government or you give an organization, a company, money that they then give back to you with interest as a coupon percent. So they have not been performing so well. We just reached a certain a level of support, of resistance, and we'll see what happens. So these are high yield corporate bonds in the United States. And let's have a look at earnings season. This is one of the hugest indicators that shows us why it's a good idea to trade. Apple. So actually today, Amazon is going to be it's going to be reporting earnings after the market closes. And I want to show you why Amazon is a good bet right now. Alibaba and Amazon, what are they? Who can tell me what the two companies specialize in? I'm going to leave that question open to chat. You guys let me know what Alibaba and Amazon specialize in. And I'm going to have a look at the graph of Alibaba. So here was their earnings yesterday. They reported a whole whopping $1 over. So here the consensus was 11.51. They reported 12.19 over the consensus. Shot straight up. Pretty good. So the reason I am directing your attention to Amazon, the graphs looks very similar, and as you can see, Amazon is already in green territory. Now it would be better if they were jumping off of this 50 period moving average, but nonetheless, if they have a good report just like Alibaba did, they're going to jump up as well. So you guys are taking your time and answering the question. Basically, Alibaba and Amazon are online retail stores, and they are also very high tech companies. They have branched out in a lot of financial tech, in a lot of user tech. They're both interested in AI, so they both do approximately the same thing. So it's a very good bet following the lead of Alibaba. And Amazon has been expanding like crazy. They have built the biggest center for the head office and for all sorts of research and development and for distribution in Seattle. And they have bought, if I'm not mistaken, I think it was something like 8 or 18% of the real estate in the whole entire city. And Seattle is a huge megapolis. It's a huge mega city. So really keep an eye out for that. Another company that really did awesome in earnings is Boeing. Boeing make the best aircrafts in the world. They're one of the blue chip US stocks, and they had a great earnings. I think it was on Tuesday. Oh no, here it is. Yesterday as well. So Boeing really did good as well. Also another $1 over the expected rate. So that just shows us. You were asking. Somebody was asking in chat whether yesterday or whether tomorrow we are down. Things are looking good. Things are looking good right now, actually, in the stock market. And the baby that we are really waiting for is, or that showed us yesterday what it was made of, was Microsoft. There we go. Yesterday was a really big day. Now, they came out with mixed guidance, so unsure of how the year is going to go. They came out with, just a penny over expectations. But the stock dragged down a little bit and came right back up. So in all tech stocks as well as in NASDAQ in general, we are seeing a picture. Now, what I really do like is that today we opened above the 200-day moving average, and it was a clean climb up. So here's an hourly chart. Doesn't look so clean. I know for the day Microsoft climbed. We actually have it in our trading platform. So Microsoft did climb for the day, and it would be a good idea to keep watching it, because usually this is the way that a new trend forms, basically. Now, like I said, on Friday we have NFP that's going to be at the end of the day. Expectations are to be at least 100,000 over the prognosis. And another really interesting indicator that I wanted to show you guys was the PCE deflator. Now, this is an indicator that shows us. Here we go. So actually, it was supposed to come out. Let me refresh the page. The PCE deflator is the Fed's favorite indicator of economic strength. It is their it's what they watch for when they make decisions on the interest rate. It incorporates inflation and it incorporates employment. So those are the two mandates of the US Fed. Basically, the higher the inflator, the more normalization the policy requires. Now, to step away from the markets a little bit, I wanted to talk about, because Thursday is for talking about Thursdays for talking about strategy within yourself. There's two things that I really want to hammer home today. First is the fear of missing out. Now, a good example would be the euro, would be gold. You guys see this graph? How many of you want to jump in on this right now? How many of you want to think that it's a great idea to buy gold? I'll let you guys answer that. And another thing, when you trade Forex, now you guys know about binary options, digital options. The way that you risk manage here is usually you have a fixed amount. Or you trade with a martingale strategy. Now, there's two ways the martingale strategy works. First is that every time you lose a deal, you double the amount next time. And the opposite way that it works is an anti-martingale. is that you double every time you win. Okay, does that make sense? So this kind of strategy, if you have a very solid trade strategy that has an expectation of at least 51%, you should be making money. But the strategy is dangerous in the sense that you could blow up your account if the doubling gets too big. Like if you miss 10 trades in a row, which has a very small probability. Mathematically, statistically, having 10 losing trades in a row is like 0.012%. So it's very small. So the first thing is fear of missing out, FOMO it's called. Basically, you don't want to enter this trade. This trade right here has no significance and no tactical advantage. There's no edge because we have no idea when the gold will turn around. We are trying to catch knives, and that's not a very good look. Okay. Another thing is discipline. Now, the fact that you guys are here today, that is discipline. You guys have stayed here till the end of the webinar. It is crucial for a trader because you can't be just disciplined in one area. I mean, if you go against your own principles on a few items, you let yourself deteriorate and you let your discipline fall. So to be a successful trader, to be a successful person, you really need to watch the way you approach life. You need to really be, you need to take responsibility and you need to be disciplined. Basically, my call to action for you guys is to come to our webinars every single day because you will learn a lot. A lot of time and effort and a lot of people work at getting this information out to you guys, and we're trying to make you the best traders and the best people that you can possibly be. So discipline is 100% one of the things that you should be working on every day, and you can congratulate yourself on having great discipline by being at this webinar here today. Another cool thing I wanted to show you guys is the Heikin Ashi candles. This is one of the interesting ways of looking at the market, and I believe that it is a very strong tool. Basically, when we use Heikin Ashi candles, we want to have two candles in a row that are green with no tail, or two red ones in a row with no tail. And you see how we're on a 10-minute time scale? We would like to have this be a 20-minute time scale. So we pass two candles during this one, and this signifies a good trend. And you can see that things like Microsoft, they actually trend quite a bit. So Microsoft had a nice long candle down just now. I would even fade this. Is this my account? So here we go, live trading. Oh, it'll be 20 minutes. I will be able to show you guys on Monday how the trade turned out. Now, does anybody have any trades from yesterday's support and resistance strategy? Yesterday, we gave you guys a strategy that had to do with support and resistance. And I want to know if any of you guys got had some great results from that. Right now, I'm going to spend a few moments looking at chat, answering your guys' questions. You guys can talk to me about if you have any questions. You guys can share your trades with us, and we will slowly be wrapping up today's session. Okay. Bangla News 24 asked, how can we analyze markets on a daily basis? Basically, you click here and you can either go 1 day, you can either go 7 days, or you can go a month. And basically, each of these shows you a higher time frame and you can analyze the markets. Now, how can you analyze it on a daily basis and get additional information than just what you get from the graphs? You can reach out to a traders community. You can come to our webinars, and actually we have a whole academy that is made for traders like you. We are here to trade you, or so to teach you to trade. Yeah, a lot of the movements, they do depend on the moves. But also technical factors play a role as well. Like you can see the 200-day moving average, a lot of like gold, the Canadian dollar, oil, they all interact with the 200-day moving average. So technical analysis plays a role as well. I'm trying to show you a holistic approach to the markets. Biop Trading Investment Solutions, that's a long name. We welcome you. Thank you so much for joining today's webinar. Good to see you. BinCap in the house. Hello. What are your network issues? Unfortunately, I can't help you from here with your network issues. Blessings, blessings. Oh, good to see you again. A familiar face. Hello. I don't understand. Game creator, you used the term Rikobi Triplo. I don't really know what that is. If you have time, please write in chat and I will try to help you. Blessings, blessings. If you deposit $100, it depends on how well you trade. You can trade for $1 a pop and you'll have 100 trades. If you have a probability to the trade strategy that you use of 51%, you will earn $51 on your $100. Yeah, exactly. BinCap said it depends on how well and how effectively you trade. Exactly. Nigeria, hello. Welcome, everybody from Nigeria. Yeah, unfortunately, no private conversations are available. You can go ahead and write your questions in chat. Huh. It looks like me and BinCap are on the same page. We don't understand your question. Go ahead and repeat that to us. Yeah, there is a trade strategy using the RSI. Rathur, what are you confused on, my friend? Awesome. Thank you so much for your kind words. I really do enjoy doing these webinars for you guys. Thank you so much for your time and have fun trading out there. Most of all, good luck. Make some money. See you guys tomorrow. Oh, and I promised, so check this out. On Monday, now this is all GMT +3. Monday is at 11 a.m. Tuesday is at 15:30. The reason it's at 15:30 is because the stock market, the US stock market, opens at 16:30, and we want to provide you guys with a lot of information and possible trade opportunities before the market opens. Wednesday, it's at 18, so it's at 6 o'clock at night. Thursday, which is today, it was at 5 o'clock. And Friday is also at 6 o'clock. Yeah, Rathur, I wouldn't trade gold. That's the thing. Don't trade it right now. It's very difficult to catch tops. Let's wait for the market to show us a great time to enter, because this is what I want you guys to know. We are talking about psychology today. Please bear in mind that not being in a position is a position. I'll leave you guys with that. Thank you guys for your time. My name is Yaroslav Burchenko. Have a great day and good luck trading out there.